Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings conference call of Sonata Software Limited. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Srikar Reddy, Managing Director. Thank you, and over to you, sir. Sir, please go ahead.
Okay, we lost you in the middle, Vikram, but we'll go ahead. Okay, good evening, everybody, and welcome to the analyst call post the announcement of our first quarter results for FY23. Here with me, Mr. Samir Dhir, the CEO of the company, Mr. P.V.S. and Raju, the Chief Delivery Officer, Mr. Jagannathan, the Chief Financial Officer, Mr. Sujit Manchi, the CEO and MD of our subsidiary, Sonata Information Technology Limited, and Mr. Satyanarayana, VP of Finance. We have posted the results on the website and the press release. So I'll give a quick high-level summary of the quarter's performance and where we are and how are we looking at the future before I hand it over to Mr. Jagannathan to take you through more detailed financial analysis for the quarter. I think overall, given the various factors, we had a good quarter.
The conference is now being recorded.
Something wrong. Is that okay? Okay, all right. Yeah, okay. So sorry, we had some disturbance, but yeah. So to continue, as I was saying that the performance was pretty good given the various factors across both our main businesses, the international services and the India business. Coming to the international services business, I think we had about a 4% growth quarter on quarter on the on a constant currency basis and about 6% on a rupee basis, about 2% on valued currency basis. I think our PAT has shown pretty good quarter-on-quarter growth. We have seen overall, I think, growth across most segments, which I think have been reported in the investor deck, which has been shared with you. Our digital business continue to show steady growth. We continue to use platformation to drive growth with our existing clients and generating new business. Overall, I think we see the demand situation still being quite steady, both with our existing clients and new clients. We have had quite a healthy pipeline last quarter. I think there were some pretty good deal wins last quarter in the international services, but for some challenges on the supply side and some delayed projects, we could have probably had better numbers. As you know, we have got on board Samir Dhir as the CEO of the company at the beginning of last quarter. We also announced and strengthened our management team with the induction of Roshan Shetty as the Chief Revenue Officer based out of London, Mr. Balaji Kumar as the Chief Human Resource Officer, and Mr. Hemant Bharadwaj as the Chief Marketing Officer. I believe that the new team has settled in under Samir, and we'll hear from him later on. To some of your questions on the India business, as I said, I think we have seen tremendous performance continued from last quarter, both on the top line and bottom line. The focus there is to become more of a rounded cloud service provider across all the three major cloud platforms, and we are executing on that strategy. So to sum up, I think as we speak, we do see the demand situation quite stable because of the rupee depreciation. I think we've been able to hold our margins, and of course, we've had these cross-currency headwinds last quarter, which had impacted the measured US dollar revenue business. But that's a high-level summary of where our business is. I'll hand it over to Jagan to take you through the more detailed financial analysis of the quarter's performance.
Thank you, Srikar. Good evening, all. Thanks for joining for this investor call. Now I'll take you through the broad financial numbers. The consolidated financial performance of has been steadily growing, very higher than the industry averages. We have a CQGR of 6% quarter on quarter for last 12 quarters, and the EBITDA margin and the PAT margin also have been growing healthy, 3.5-4%. We have been continuing to do both in international business and also the India business have been steadily growing every quarter. The international business, the revenue has been this quarter we had a 2% quarter on quarter dollar revenue growth, and the constant currency is around 3.9%. In terms of rupees, 5.5% growth. Very stable at this kind of currency cross currency impact. We had a strong in spite of a cross currency impact, our growth has been very stable and constant. We are, as mentioned earlier, we will continue to focus on the growth, and the performance will continue to be steadily growing. In terms of our profit performance, thanks to rupee depreciation, we are able to observe some of the costs for the salary increase, cost of payroll, as well as the senior management investments in this quarter. We continue to outperform in the profitability. Next. Domestic business has been doing really well. Consistent growth in their gross contribution, and their profit element is continuing to grow. Their revenue growth is also very strong with the new volume demand. This is continuing to be very strong across the market. We are very confident of performing well in volume terms as well as in the profitability terms in the coming quarters. This business has been doing steadily well. These are the broad financial numbers for your references. This has been shared in your press release also. Some of the operational metrics for you to review. US continue to be at a stable level of 57% revenue, and Europe continue to be at 21-22%. The rest of the world contributes the balance in terms of revenue. Our contribution of ISP has been stably at 32-33%, and the travel remains at the same level. There is no major change in the industry contribution in this. Competency wise, we have again
That was one, and then I have a follow-up on the retail.
Okay. Yeah. What is the question, Mohit?
Sir, on the margin side, you spoke about costs and then rupee depreciation benefiting you in terms of absorption of those costs. So from senior management hiring perspective and also from wage hike, supply side constraint, etc. So the cost for FY23, now the 1Q cost number when we look at it, is that a steady number or do you think there is some planned promotions, increments, etc. coming up in 2Q and 3Q as well?
Yes. As I said, we continue to invest on the leadership side throughout the year, so that will continue. And our wage review is in the January quarter, right? So that needs to come up for FY23, right? So we do it in January and then in April for middle management. So that will continue going.
Right. So June quarter includes that senior management appraisal, right, which was done during.
Sorry?
So we are done from a 1Q perspective because you just did it back to back in the quarter. So Q2 and Q3, there are no incremental costs, so to say.
Q2 and Q3, there will be no across the board wage hike. That's correct. But we continue to, we have not completed our investment in talent of the leadership kind, sales, pre-sales.
Okay.
As I said last time, we had opened up these development centers in Canada, Ireland,
Right.
Something in Mexico. I think some of these investments will come up in Q2, Q3.
Okay. And second was on the retail side, like what kind of environment, because you have retail, essential, non-essential commodity business, etc. So is there any impact that you guys are anticipating there ahead, or do you think it is because you had a strong quarter? So from a deal pipeline perspective, do you think there is any slower growth anticipated through the year, or do you think you guys can sort of maintain the current growth rate?
Let's say something and then I'll probably hand it over to Samir to say something else. I think it's time we now combine both these essential and not essential because that was a factor of the COVID where essential retail was okay and non-essential was not okay because, they were not open and nobody wanted to consume it. So we combined it back because that the segregation is gone. So as you said, based on the deal pipeline, that's a focus vertical for us and things are looking good. But as I said, I'll possibly have Samir to add some more color to that.
Thanks, Shikhar. Hi, this is Samir. So I think across the board in retail, we're really seeing a good, strong momentum based on three factors only. Number one, because the footfall are back in the traditional brick and mortar retailers, they have continued to invest on the consumer experience side and actually going aggressive to get a bigger wallet share from them. Second, the trend to modernize their IT estate from a cloud perspective is also pretty prevalent. And the third is the adoption of data and using data ecosystems to analyze consumer data is also pretty prevalent. So I think across the board, we continue to see, at least at this point in time, good momentum across the retail sector.
So overall, is it fair to assume from your current deal pipeline perspective, you guys are more likely to sort of continue running on the growth path that you are currently on?
Yeah, I think it's a fair assumption in my mind at this point, yes.
Perfect, sir. Thank you. And this is actually our first con call. I think you were not there in the last one. So we'll keep interacting and all the best for the coming quarters.
Thank you, Mohit. I look forward to the relationship going forward.
Thank you. To ask a question, ladies and gentlemen, please press star followed by 1 on your touchtone phone now. We have next question from the line of Dhwani Savla, an investor. Please go ahead.
Hi, sir. My question is with regards to our headcount. I can notice that our sales and marketing headcount has pretty much remained stable. Are we expected to increase that on our work front and probably get more deal wins? And is there a particular target headcount which we have by the end of the year that we are going to achieve by the end of this year?
Sorry, your line is very weak. We could understand your question, but from whatever I understood, you said that there was not too much of a headcount growth in the first quarter, and is that the trend or whatever? I think the question was addressed by Mr. Raju last time, but maybe I'll ask him to address the question again in terms of the recruitment plans for the current year.
Yeah, what we have seen in quarter one, we had a net headcount of double-digit number. That's because of two things. One is that increased the attrition rate, people think that has come down now. So going forward, this quarter you can see much higher headcount increase. We're also seeing the trainees and campus hires coming in. So next 2 quarters you can see much larger numbers adding to our headcount.
Is there any target number which we have in mind which we want to have by the end of this year?
We don't have a specific target. We don't give guidance on that, but we're adding the 600 campus hires in the next 2 quarters.
Okay. Okay. All right. Thank you very much, and all the best for the coming quarter.
Thank you. To ask question, ladies and gentlemen, please press star 1 now. We have next question from the line of NGN Puranik with Enam. Please go ahead.
Hi, Srikar.
Hi, Puranik.
Hi. I want to understand about your Microsoft relationship. So in terms of how big is the relationship in terms of current revenue, and also in terms of the sales organization that's working with them, and which are the groups that you're working with? You mentioned it, you work with Dynamic. So do you work on the Power Platform also, and the only Dynamic, or other groups also?
So, Puranik, I won't give out the number because we need Microsoft permission to give out the number, but otherwise we work with about 4 groups in Microsoft. One is the Microsoft product engineering, which is mainly the, as you mentioned, the business apps group. So there we work across all the platforms, what they call F&O, Power App, Power Platform, customer experience, etc. We work with the customer service function, where we support mainly the app. That's also across the board, Power Platform, F&O, and a whole lot of other.
You mean the CRM Dynamics part of it you're working?
Sorry, Puranik?
Is it CRM Dynamics?
Yeah. F&O, CRM, Power Platform, and also non-Dynamics and the customer support. And the third is we do internal IT in both data analytics and Dynamics implementation.
That's the Power Platform, or other than that?
Sorry, Puranik?
Is that the Power Platform or internal IT? You said analytics and internal IT. That is other than Power Platform.
No, analytics. There's a third group we work with, which is the internal IT, where we do analytics and Dynamics implementation.
Dynamic implementation.
The fourth is we work with the consulting things to serve their clients.
This is the operator. We can hear you, but with request if you can come a little closer to the mic. You sound a little distant now. So
Yeah.
Thank you.
Is it okay now?
This is Samir. Can you hear me now?
Yes, better. Please go ahead.
Better? Yeah. No, I was asking you, is there a scope to expand relationship by having more people?
Manik, I handed over the question. Samir is about to address that question about the scope and what we are trying to do there. Yeah.
Yes, absolutely. And I think we're in the process in more ways than one, Puranik, to address that. So first of all, we had a good growth in the last several quarters at Microsoft. So we continue to take market share from competition in the Microsoft relationship overall. But to your question, can we do more? I think the short answer is yes. Microsoft is just completing their annual planning process in June-July timeframe. As we come out of this planning process, we'll look to align our sales investment dollars with their plans. And that exercise is currently on. As you probably know, Inspire happened on 19th of July, just a week back. And our teams are working hand in glove with them to take a larger share of the pie from Microsoft from a sell-to perspective. So that's a short answer. And across the board, and Power Platform included, is really a go-forward strategy to shore up business in that direction, Puranik.
Now, will it help expanding relationship with more people, or it would be important to work with other groups? Because I think these two groups itself has enough and more opportunity.
Yes, it's not either or, it's both. So we'll have to get bigger wallet share from the existing people that we have a relationship with, and we'll continue to hunt in the account to build a stronger relationship with other buyers that are not buyers of Sonata today. It's both ways, Puranik. We're looking at dual attack strategy.
Is there a low-code, no-code projects that you work with them?
Yes, we do. We are already part of that, and that's an increasing part of the focus of Microsoft. As you probably heard, Satya also talked about a big focus on the Power Platform and the low-code, no-code. I think that's an integral part of our go-forward as well.
So that learning has been used in your project development, various projects, the low-code, no-code?
Yeah. I'll let Raju respond to that.
Yeah, Puranik, we are doing two things. One is we are started working on the whole Power Platform, both on the data side and also on the application side. We're doing work with Microsoft, with other customers, and we're also a lot of things we're learning from that, how the new applications are building and what are our frameworks to accelerate that in the market.
It's interesting. And what are the typical project sizes? The deal wins when you get Microsoft deal, typically what size it is? And they are all must be real annuities.
Yes. What happens is the Power Platform, typically when the customers are going digital and want to get the digital processes and customize their applications, they're using the Power Platform. This will be annuity, depends on, and we'll have a team of center of excellence for them. That's what we're proposing to customers. So each project itself can be small, but we build a team and we get an annuity business. Things are starting now.
And bulk of it is all offshore projects.
Bulk of it will be offshore, but we need to have some of these people who understand the whole digital process. Those people need to be, strategists must be on site. All will be offshore.
Good, interesting. So you are working on other groups also, looking at building relationship with other groups also?
Yes, Samir, again, yes, that's absolutely the strategy, because Power Platform is not a singular vector within Microsoft. They're looking at it as a horizontal capability across all units. So as we work our plans with them for the next fiscal, the interlock is happening as we speak, and the idea is to spread it across all units. And like Raju said, we are looking at not only doing it for Microsoft, but work with Microsoft to do it for our other clients as well. And generally speaking, the modus operandi is to set up a COE, because these are bespoke projects to start with, because customers try to do a trial balloon out, and as a trial balloon becomes successful, they go big bang. So if you set up a COE, then you're setting the foundation for a bigger play moving forward, and that's the part that we're taking.
And that means hiring more account partners.
That means, yes, expanding both from a sales and hunting perspective, both, because you have to mine where the relationships are already there and also look for new relationships. So dual strategy again.
Good. Thanks a lot. Wonderful. Bye.
Thank you. We have next question from the line of Baidik Sarkar with Unify Capital. Please go ahead.
Gentlemen, good evening. Srikhar, I recollect we left about 2.5% of revenues on the table in the previous quarter, Q4, given supply side issues we faced in Q4, right? And on the back of that, this quarter we've reported about 4% in constant currency. Is this reflective of the revenue potential in its entirety? Because it looks like there has been a significant amount of backfill from the previous quarter. And, adjusting for that 4% looks a very okayish number. A, am I missing something? And B, should we expect a significant acceleration going forward in the next few quarters? And also, while we're at that, Srikhar, if you could just comment on, the deceleration we've seen on Microsoft account. I think after, several quarters of 7-10% kind of growth, I think the numbers this quarter have been slightly underwhelming. Any color on that?
Okay. I don't know about the second question where you're getting this information from because we don't publish it.
I'm just looking at your reported numbers on page 23, where the Microsoft Digital is up just 2.2%, and your reported sequential growth of Microsoft Dynamics is 0.7%. So I'm just looking at the reported numbers.
No. This is nothing to do with Microsoft as an account, right? This is the overall services market, which includes what we sell to other customers, not just Microsoft.
No, I'm aware of that, Srikhar. Anyway, let's go sequentially. If you could just take the first question and then I'll rephrase it later. Thanks.
Yeah. So as I said in the beginning of the call, that the backlog effect will remain. So it's not that we completely filled up the backlog. We filled up last quarter's backlog with acquired new backlog.
Srikhar, if you could please speak closer to the microphone. I'm afraid we can't hear anything at all.
So as I said, the backlog effect still remains, and the backlog of the previous quarter was what was delivered this quarter. As I said at the beginning of the call, that we still need to get that fully done. So that's the answer to your first question. I'll ask Jagan to answer your second question.
I think which data you are referring to. This is the analyst what we have now. I showed to you now, operating metric.
This is your reporting thing. I think this is on page 22 of your reported, the reported deck. Okay, you know what, Jagan, I can take that offline, but if I can, either request Samir or, Srikhar to comment on, the quantum of acceleration we should expect going forward. That's more important.
Yeah. Okay. Hey, that is Microsoft Digital Platform Services alone we are talking about. There is, you have to combine the Microsoft into other areas are also there. This is one aspect of the Microsoft.
Sure. If I can invite your comments on the quantum of acceleration going forward. And, just to rehash in terms of guidance, was it a number with guided closer to 20% in your core IT services at the beginning of the year?
We don't give it, right? We don't give a quantitative guidance, but we've said it many times.
Sure. But in terms of acceleration, just given the quantum of backfill that's still pending, is it fair to expect that we should continue delivering at this run rate?
As I said, that we can expect, given the current visibility unless things change in the future, we can expect an acceleration for the future quarters.
Sure, that's helpful, Srikhar. And if I can just squeeze in for Samir. Samir, welcome aboard and good to say hello. I hope this is a good journey for you. Could I perhaps ask you to quantify the direction of IT services growth in the non-Microsoft part of the business, right? What are you seeing? What are you excited about? What is our right to win? And if there's a number that you have in mind you'd like to hit over the next 2, 3, 4 years.
Yeah, very glad to meet you as well. I think very consistent with what Srikhar said. The demand pattern is very secular at this point in time. And in the industry that Sonata has invested in the past, whether it's the retail, manufacturing, IFC business, I think we continue to see a good demand pattern, at least at this point in time. As we know, the macroeconomic conditions are revolving around us all the time. But as we speak, the demand pattern is pretty secular. Now, if your question specifically is what's the trend outside of that, we continue to see good momentum across our operating geographies, whether it is US, UK, Singapore, or Australia. We continue to see good momentum from a pipeline perspective. In the current environment, it's really supply constraints, and we're really working hard to get through the supply side of the equation at this point in time. We don't think the demand side of the equation is holding us up. That's why Shekhar's commentary that we do want to expect the acceleration as the ETG batch that Ravi talked about comes in. We think that will give us a further quantum jump into the supply side, and that will start to reflect in the coming quarters, next 2 to 3 quarters down the line.
So thanks, gentlemen. I wish you all the best. Thank you.
Thank you.
Thank you. To ask question, ladies and gentlemen, you may press star 1. The next question from the line of Amit Chandra with HDFC Securities. Please go ahead.
Yeah, hi sir, and thanks for the opportunity. So my question is on the travel vertical. So if you can provide the constant currency growth for the travel vertical, and also with the travel coming back in the Europe and TUI reporting 80 to 90% of their pre-COVID bookings returning back. So when can we see the travel coming back, because we are still at 50% of pre-COVID? If you can throw some light there, whether our engagements have completely changed with UI, like what we used to do pre-COVID and what we're doing now.
Okay, no, I think, can you hear me?
Yeah, I can hear you.
Hello?
Hello. Yes, sir, I can hear you.
Yes, sir, we can hear you.
Yeah. Okay. So yeah, as I said last time, there are two growth patterns. One is where they're investing in building new technologies, and that's where we are engaged. So we're waiting for the business to fully come back for them to invest on what they call business as usual. So we expect that to happen by Q2, Q3, and we can see that trend going upwards. As I also said last time, because post-COVID, there was a fairly big shift from on-site to offshore. I think we had about 200 people on site. I think now the 200 people has come down to about 40 people because people have to come back. So that measurement of that revenue has to be properly factored in when you say that we can go back to where we were pre-COVID.
Okay. And in terms of the constant currency growth for travel vertical, if you can provide that.
Constant currency growth for travel vertical, you are asking about this quarter?
Yeah, this quarter.
Yeah, this quarter, it is in line with this same level. You see the revenue contribution for travel vertical is same. I don't have the revenue numbers, but I can share them with you.
Okay. And
so with the company,
okay.
Gap between constant currency and this.
Yeah.
Travel vertical may have more drop impact for that.
Okay. So actually, your voice is not very clear. It's breaking.
Okay, Amit, you are able to hear me now? Am I clear?
Yeah. So better. And sir, on the second part. Hello, operator.
Can I update? Can I update now?
Yes, please go ahead, sir.
Are you okay now? Are you able to hear me?
Yeah, better. Yeah, better.
Yeah. Okay. Amit, the constant currency growth will be little more than the company level because there was the cross currency impact was much bigger in the Europe revenue. I don't have the number ready made with me. I will have to take the number and update you separately.
Yeah, sure. And sir, on the on-site offshore mix, obviously, we have seen a shift to offshore, but now things are reversing, and for some companies, on-site is actually increasing. But we have seen a significant increase in offshore revenue. So is it is it because of the change in engagement or because of travel, as you said, because a lot of work has shifted offshore and the incremental growth is coming offshore, or like anyways it's helping our margins, but is it going to be a headwind, in the coming quarters? Maybe it can, the onsite can increase more faster.
Yeah, I think that some of it has been driven by the inability to travel and the visa regimes, etc., where I think we're trying to convince that it can be done for sure. But I think your point is correct. Once things the implied revenues will increase on a percentage basis more kind of stuff. But I think right now there has been a fairly serious travel issues on visas and a long line, 6-month wait period, etc.
Okay. And also in terms of the domestic business, there we have, for the first time we have seen the cloud component coming down. So obviously it is because things are reversing. But can that have an impact on our margins on the domestic world or on the growth, because last 2 years have been very strong for the domestic product services business? So what is the normalized growth rate that we can expect in that business?
I think we are steadily growing the cloud component in the domestic business. I'm not too sure where you're getting this number from.
No, but in terms of the percentage contribution, it has come down, I think, in this quarter.
Managed cloud services.
Domestic.
Hello.
From the investor deck you are telling?
Yeah. So on the cloud piece, which was 78%, come down to 76% revenues on page number 28. That is given. Cloud on cloud.
So the quarterly number, that's it's just a quarterly trend. I mean, there is no one-way trend. There's just a quarterly number. That's it.
Okay. So over the longer term, 20% plus kind of a growth is achievable in this still in this business, and in terms of margins.
The line is very unclear. What is the question?
No, so I was
domestic in terms of the gross margin.
Yeah.
Yeah, I think given the trend so far, I think that looks doable.
Okay. Okay, so thanks and all the best for the year. Thank you.
Thank you. We have next question from the line of Dheeraj Dave with Samvad Financial Services. Please go ahead.
Yeah. So first of all, sir, I will request this time the conference call, the way it has been organized. In fact, I was listening for last 40 minutes. I could listen all questions very clearly, but whatever answers you were coming from your side, either it was kind of getting echo or what, I don't know, but there was, basically I didn't get what you answered almost 50% of the time. So request you to take this and organize, at least you listen this con call recording, you will realize what I'm saying. So that's the first part. Second part, basically how you see your manpower supply constraint and what are your plan, because you indicated some kind of addition. In fact, that figure also I missed out, although I was on call. So what is your plan to address the supply side and how it has affected our margin?
Okay, I'll ask Rajiv to answer that question again. Hopefully you can hear it now.
You can hear me now?
Yeah, we can hear you.
Yeah. So on the supply side, we are doing 4 or 5 things. One is since there is a visa, getting visas now is taking time to get appointment. We started building capabilities in our onshore location. We opened a center in Ireland. We also opened a center. We also have a center in Canada. Also, we're looking for hiring in US and Australia. That's one. Second thing is our campus hires. We are taking 600 campus. We already hired them. They're coming on board this quarter and next quarter. We also
this would be for this 600 would be, yeah, sorry sir, this 600 would be for full year or just 2 quarters, like?
We'll take them in 2 quarters, but we'll utilize them over 2-year period.
Okay, fine.
But we need to train them, so just take 3 months, something for them to become proactive.
Okay, and how the manpower cost has affected our margin?
Manpower cost, we already taken, we gave the compensation is already given now in January and April. So I think there might be little spread, but there is significant change in the cost.
Okay, fine.
We're confident on that part.
Okay, and we'll request, sir, means basically if you can organize conference call. This time it was very, very difficult. I've been attending almost for 3 years. First time I faced this issue.
We're extremely sorry about the inconvenience caused to all of you. I think in the first call we are also having physically from the office, so we'll go back to working from home next.
That was better. Anyway, wish you all the best. Thanks a lot.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star followed by 1 on your touchtone phone now. We have next question from the line of S.A. Narayan with Capricorn Research. Please go ahead.
An observation to the management. As a courtesy to the participants, could you please always use the handset? It's been impossible listening to you. It's frustrating. Been participating for now 35-40 minutes. It's a waste of time. If you don't use the handset, please don't invite the participants, please. Thank you. That's all I have for you.
Thank you. Anyone who wishes to ask a question may press star and 1 now. Thank you. As there are no further questions from the participants, I would now like to hand the conference back over to Mr. Srikar Reddy for closing comments. Over to you, sir.
Yeah, thank you all very much for joining the call today, and extremely sorry for the inconvenience caused to all of you because of the quality of the call. As I said, that we started doing this again from the office and using the technology probably not been used for some time. But sorry again, and hopefully the transcript of the call would be made available to all of you, and that would be clear, and we'll put it out on the website, and then we just ensure that this doesn't repeat itself. So thank you all for your support. I look forward to seeing you all again the next time. Thank you. And thank you, Vikram.
Thank you very much, sir. Ladies and gentlemen, on behalf of Sonata Software Limited, that concludes this conference call. Thank you for joining with us, and you may now disconnect your line.